Welcome to our weekly roundup of key business developments in Sri Lanka. I'm Nishani Pigera. Let's look at the main stories for this week. Sri Lanka awaits response from bondholders on counter-proposal. ETCA talks with India to resume. Significant electricity tariff cut to be proposed. In our main story this week, the Ministry of Finance is awaiting a response from bondholders on the counter-proposal for the debt restructure presented by Sri Lanka. In October last year, the bondholder group's offer for a 20% haircut and issuance of macro-linked bonds was not favourably viewed by Sri Lanka. According to K. Mahinda Siriwardana, Secretary to the Ministry of Finance, talks with private creditors were progressing at a satisfactory pace. However, bondholders had previously complained of a lack of transparency and delays by Sri Lanka. In 2023, the island nation reached a debt restructure agreements with the official creditor group and the Exim Bank of China. In a significant development, a cabinet paper on halting Parate execution or auctioning of pledged assets of small and medium enterprises on bank loans that have now gone bad is to be presented in Parliament. According to State Minister of Finance Ranjit Siambalapitiya, this would be for a defined period. However, banks warn this would make lenders more cautious when lending as they have to protect depositors, adding that good borrowers will also pay a price if recovery is made more difficult. According to Indian media, Sri Lanka and India are likely to enter into the Economic and Technology Cooperation Agreement in the 2024-2025 financial year. Talks resumed after a 5-year hiatus, building on the free trade agreement implemented in year 2000. Areas focus on rules of origin, dispute resolution, and technical and non-technical barriers to trade, among other issues. The 13th round of talks was held in January this year, while the next round is slated for March 10th and 12th. Opening up service sectors, particularly engineering and medicine, have been challenging as Sri Lanka fears a loss of local jobs. In February, Sri Lanka and Thailand signed a free trade agreement, and talks with China on such an agreement are set to resume from April. On Wednesday, Kanchana Wijesekara, Minister of Power and Energy, said that a significant reduction in electricity tariffs will be provided. According to the minister, an amended proposal will be submitted to the Public Utilities Commission of Sri Lanka this week. In January, the CEB proposed a meagre 3.34% cut, citing additional expenses. This drew sharp condemnation, with the PUCL saying that 25 to 30% reduction is possible. Minister Wijesekara added that proposed maintenance expenses will be excluded in the current financial year and be spread over the next 3 years. This week, Iranian Foreign Minister Amir Abdullahian was in Sri Lanka. His meeting with top government officials, including President Ranil Wickremesinghe, focused on enhancing the close and cordial bilateral relationship between the two countries. Sanctions since 2012 placed on the Middle Eastern country has made trade with Iran challenging. Sri Lanka is now paying $250 million due for crude imports through tea export earnings. Meanwhile, according to a statement from the Prime Minister's office, Iran has agreed to provide another 31 million euros grant for the rural electrification project. Further, Ibrahim Raisi, President of Iran, is slated to visit Sri Lanka later this year for the commissioning of the Umaoya 120-megawatt power plant. Sri Lanka continues to benefit from the unrest in the Red Sea shipping lanes as the port of Colombo saw a 25% increase in transshipment volumes in January from a year earlier. With shippers deciding to reroute their vessels around the Cape of Good Hope to avoid disruptions to shipments and high insurance premiums, the Colombo port has emerged as a major transit point. Transshipment volumes accounted for a substantial 81% of the total throughput. In our weekly tourism update, during the first 18 days of February, over 138,000 tourists arrived in the country. Daily arrivals reached over 7,700 and are now at pre-COVID levels. Russia was the primary source market, followed by India and the United Kingdom. SLTDA is expecting over 200,000 arrivals in the month, almost on par with January. Now let's take a look at the weekly movement of the All Share Price Index and the S&P SL 20 Index at the Colombo Stock Exchange. At the Treasury bill auction held on Wednesday, yields on all maturities were mostly unchanged. Bids amounting to 250 billion rupees were received, of which 104 billion were accepted. The Sri Lankan rupee was steady against the dollar this week, with the central bank's indicative mid-spot rate ranging around 312 rupees. And with that, we wind up for this week. Do subscribe to our YouTube channel at the link below for regular updates on economic and business developments in Sri Lanka. Until we see you again next week, thank you for watching. Stay safe.